When allocators add international exposure, the real question is simple. Will it behave the way international is meant to in a portfolio? Since 2019, international markets have tested portfolios through shocks, inflation, and volatile factor rotations. We combine insights across Wellington, bring ideas through multiple green lights, and build the portfolio to avoid outsized non-stock risk drivers while balancing disciplined stock selection with deliberate portfolio construction. Hi, I'm Halsey Morris from Wellington Management and one of the portfolio managers of the Vanguard International Core Stock Fund. Wellington Management is one of the world's leading independent asset managers with over $1 trillion in assets under management. Founded in 1928, our research-driven approach and long-term thinking are at the heart of our investment solutions, which span all major asset classes across geographies. The Vanguard International Core Stock Fund is designed to serve as a core non-U.S. equity building block. Its objective is to deliver consistent, long-term excess return while maintaining a disciplined core footprint and avoiding undue dependence on style, macro, or factor exposures. In practice, that means offering broad, international equity exposure in a portfolio that is diversified, risk-aware, and built to add value through repeatable stock selection. Within a broader non-U.S. equity allocation, we think the fund is designed to do exactly what investors want from a core anchor: stand on its own, stay broadly balanced, and fit cleanly alongside other allocations. The philosophy is to keep the portfolio balanced, limit style drift, and let stock selection drive results. The team explicitly manages sector, country, and factor exposures so that no single style influence dominates the outcomes. This allows the strategy to function as a true core allocation. Our edge lies in our multidisciplinary process. We believe generating alpha over the long run requires an approach that is flexible, opportunistic, and not beholden to a single framework to define the investable universe. Rather than relying on one lens, we seek to identify the best ideas from multiple pools of alpha across Wellington's investment platform. This includes global industry research, investment boutiques, quantitative, ESG, and macro. That breadth is central to the design of the strategy. At the heart of our process is the alpha signal, which combines three primary inputs: a strong quantitative signal, positive conviction from Wellington's global industry analysts, and breadth of ownership across the firm. We have long believed that integrating quantitative and fundamental sources of excess return can improve decision-making, strengthen conviction, and raise the probability of success. We also believe that centralized risk management is a key advantage. Each portfolio decision is supported by multiple pillars of conviction and grounded in a framework that seeks to minimize large concentrations of risk. The goal is to ensure that the majority of portfolio risk and relative return comes from stock-specific factors, not factor tilts or macro exposures. Over time, we believe that leads to higher quality and more consistent risk-adjusted outcomes. That philosophy is reflected in the team's use of a pre-trade tool, continuous risk monitoring, and explicit oversight of country, sector, and style exposures. The team structure is also an important part of the edge. My background as a global industry analyst complements Anna's experience as a diversified portfolio manager. Namit extends the team's reach across Asia and emerging markets. More broadly, the team's footprint across Boston, London, and Singapore creates strong connectivity across Wellington's global platform and brings different regional and analytical perspectives into the decision-making process. We believe that combination produces a differentiated perspective, both in assessing individual investments and in managing a resilient portfolio. We think this approach is particularly well-suited to non-U.S. equity markets because they're inherently more heterogeneous. Regional policy regimes, sector structures, governance standards, macro backdrops, and market behavior can widely vary across countries and industries. In that setting, a one-dimensional process is often too narrow. A process that combines local market context, fundamental insight, quantitative screening, and portfolio construction discipline is much better equipped to capture the breadth of stock-specific opportunity that exists outside the U.S. The main takeaway is that the strategy has behaved largely as designed. It was built as a style-neutral core allocation intended to outperform across a wide range of market environments, with idiosyncratic stock selection as the primary driver. Since inception, it's been tested by a global pandemic, inflation, rate shocks, wars, and periods of narrow market leadership. Through those environments, the process has remained consistent. During the COVID sell-off, the portfolio experienced its most significant drawdown and initially lagged the benchmark, but both absolute and relative performance recovered as markets normalized. In the 2022 drawdown, the strategy held up better on a relative basis, illustrating its ability to be resilient in stressed environments. Since inception, the overall pattern has been consistent with the kind of asymmetric profile the team is trying to produce: meaningful participation in rising markets with relatively better downside behavior in more difficult periods. At the same time, the team has been clear that some environments are naturally more challenging. Periods of unusually narrow or speculative market leadership, especially when returns are driven by sentiment, crowding, or sharp style reversals, are not the environments where our strategy should be expected to add the most alpha. What investors should take away is not that the strategy is meant to win in every short-term regime, but that the design has been pressure tested. It suggests the process is durable, and that the portfolio construction and risk oversight are functioning the way they were intended to.